Welcome back to another episode of Lucid Daily, and in this episode we will go ahead and go over exactly what Lucid needs to do in order to hit $200 a share, and we'll go ahead and announce a couple of things as well. First off, Lucid was named the best luxury electric vehicle by US Cars News. Congratulations to Lucid. This is absolutely incredible. They have been winning a lot of awards in the sedan space as well as the luxury space, and obviously the EV range space as well. Absolutely incredible. Lucid continues to rack up a lot of awards, and that's super exciting as a company, as a shareholder, and as just for the actual product itself. So let's go ahead and dive into exactly what Lucid needs to do in order to hit $250,000 a share, $200 a share. And because I made a video a couple of days ago going over exactly what would happen in each situation if Lucid delivered 6,000 cars, 12,000 cars, 50,000 cars, 100,000 cars. And now I want to talk about what Lucid needs to do to hit $200 a share. A quick disclaimer, I do not profess this spreadsheet to be perfect. I'll tell you guys where I think it's imperfect, but I think that it ballpark gives us a good idea. So let's go ahead and dive into it. So in order for Lucid to hit, we're going to work this one backwards. As you can see here, let me zoom in a little bit. As you can see right here, ignore this, we'll do 250 right here. So if we want Lucid to hit $200 a share, it's $206. It'll have to be trading at a PE ratio of 75, which may be quite high, but I could be wrong. So we'll keep going. They'll have an earnings per share of about $2.75. This is with the outstanding shares of 1.6 billion. Now, we do understand that they will have to be raising money late into 2023. We don't know how they're going to raise that money yet, but if they do add any more shares, that'll obviously affect the earnings per share. It'll affect the PE. It'll affect everything in terms of calculating this price. So this is pretty important to understand. So now we're going to work from the top. I'm saying that they're going to get an average revenue per vehicle of 80,000. In order for them to hit 250,000 vehicles, it means one, they're cranking out the Air Pure, which is I think it's the $77,000 car. I don't know when this will be. I'm not putting a date on this, but they will hopefully be shipping a $25,000 car within the decade. I know that's what Peter Rawlinson really wants to do, but he says his passion is in the Pure. And he mentioned on the earnings call that they will be producing and shipping the Pure in Q4 of 2022. So that's actually one of my questions as a shareholder is, will the Grand Touring performance announcement hinder or delay the production of the Air Pure? So hopefully we get that answer on the earnings call. But I'm saying, nonetheless, we get a revenue per vehicle of 80,000. I actually think this may be a little bit low just because Lucid will have higher end vehicles. But I think with the amount of cars that I have calculated, that a lot of them will be Air Pures, or best case scenario, they're shipping a lot of the $25,000 car. And that's why this revenue per vehicle is so low. The number of vehicles that got me to that $206 share price was 250 vehicles. That gets them $20 billion in revenue. Now, this is where I think my spreadsheet would be wrong. So there's a couple of things. One, I'm only accounting for revenue of their total sales, which will obviously be, I imagine, 75% of their revenue, if not higher. So we don't have any leases, we don't have any services or any revenue from battery energy technology. We have no projections for this, so I don't think it's really fair to include it into calculations. That gives us a total revenue of $20 billion. And then expense on sales, I'm giving them a 70% expense margin, so they're making 30% on each car, which it took Tesla a while. They just hit that this last quarter. So it's not impossible, it's definitely doable. So if they have a $30 profit on each car, that means they spent $14 billion to get to that $20 billion, which is actually fairly good. Next, I have their R&D and SG&A. I think it's actually fairly low. I think it'll be a lot higher than this. I think Tesla last quarter was at 800. It was either 600 or 800 million for a quarter, and I have this at 600 million for a year. And that was what they did. This is what they did last quarter, or they did a fourth of these numbers last quarter. And so I just extrapolated it, multiplied it by 4, and because we don't have a full year of production yet, so I just extrapolated it by 4, and these are about what we should be seeing in terms of operating expenses. We don't have any other cost of interest or things like that. This is super dumbed down, super basic, but I do think that this gives us a somewhat of a good idea what Lucid needs to do to hit $200 a share. And then that gives them a net income of $4.5 billion. I don't even have their taxes in here. So if we do a 21% tax rate, I don't think that this is plugged in. No, I don't have it plugged in yet, but they'll have a 21% tax rate. So I'm even giving them the benefit of the doubt. It may have to be higher, like 275, maybe even 300,000 cars if we include the taxes. I just didn't because I don't know what their tax rate will be, nor do I know what kind of EV incentives or tax breaks they will receive. And this does not include the actually, this may include the ramp up for the Saudi Arabia factory. I'll have to double check on that. So that gives us a trading at a $75 PE ratio. That gives us a $206 a share. Now I want to go ahead and show you guys something really interesting. We're gonna go ahead and look at this together. So we're gonna go market cap calculator, and we're gonna use this one. So price of a single share. If we look at Lucid right now, they had a bit of a rough day. Lucid was down 2.25%, and they're down at $19. They broke the $20 mark, which is quite unfortunate. But I'm here to provide real information on a daily basis to help investors understand where we need to go, what production needs to be at. What I don't want is I don't want endless hopium, and I don't want emotions saying, oh, I want Lucid to be this high. Well, if you want Lucid to be $200, here's what needs to happen. So just keep that in mind. That's why I'm here. I'm a Lucid investor myself, but I do want to. It's not a very in all transparency. Lucid is a relatively small portion of my portfolio, but nonetheless, I've really enjoyed learning about this company and learning how they operate, and hopefully, in a couple of quarters and maybe. Yeah, probably two quarters from now, we can start to see Lucid tick up in a great way. That'll catch a lot of eyeballs, but we need to start figuring out our production. So let's go back to the market calculator. So they're trading at $19.11 right now. So if you do 19.11, number of outstanding shares, we're going to go, I got this from their last annual earnings. We're going to copy the shares outstanding. We're going to paste it in here. That'll put Lucid at a... Wait, why aren't there commas? There we go. That'll put Lucid at a 31 billion. Hold on, 100,000 billion. That'll put Lucid at a $31 billion market cap. That's what it is at right now. So we can kind of fact check that. $31 billion. It's at 33, so it's extremely close. $2 billion off. Which, in the grand scheme of things, I mean, Lucid fluctuates that much in a day. Sometimes. So let's say if people are wanting this $200 a share. Whoops. Well, that's $2,000 a share. $200 a share. That puts Lucid at a $330 billion market cap. Just to put that in perspective, that means they're a third of Tesla. So, Tesla's on track to ship 1.5 million vehicles this year. So just putting everything into perspective, I just wanted to do this because a lot of people have been burnt by Lucid. And I want to start speaking with numbers so that we're not just saying, oh, I hope Lucid does this, or I want Lucid to do this. Well, here's the numbers that need to happen. And in order for them to hit near $200 a share, if they keep their operating expenses low and their margins high, which is obviously a lot easier said than done, then they can, and they produce 250,000 vehicles at $80,000 per car. And they still trade for a high ratio, then we can start to see that $200 range. And at 250 cars, some people may still think it's overvalued, but that's when the numbers begin to make sense. They may be trading for a higher PE ratio. Let's say they trade for $275 a share. Look at that. But maybe let's say they trade for a $50 PE ratio. 137. So you can see how that affects a lot of different things. I keep it at 75. I think that's relatively fair, especially for an EV company. So yeah, if you want if you want Lucid at a $1 trillion market cap, I believe the number is 700. Let's see, 650. Let's see, 600. So let's do 625. That's as close to a trillion as I'm going to get it right now. They have to be $625 a share to be a $1 trillion company, and they'll have to have over 1 million vehicles on the road for them to be at around this. So that's my prediction. Obviously, like I said, this spreadsheet may not be correct 100%. If you want details on my projections for this quarter, this next coming earnings call, I'll go ahead and link to the video right after this. But yeah, I hope you guys enjoyed it. And if you enjoy my perspective on Lucid on a daily basis, consider subscribing. Again, shout out to Lucid for the incredible award that they received today for the top luxury vehicle. I hope you guys enjoy this. I hope you guys enjoyed this video. And like always, we'll see you next time. Thanks for watching.